So at jiu-jitsu, I walked into jiu-jitsu a few days ago, and one of the guys, I walk in there and he's on the mat and he looks at me and he just like stares at me, dead stare. And I was like, what's up, man? And he's like, I've been a cripple for the past 4 days because of you. And I was like, what do you mean? And he's like, I couldn't move my neck left or right for the last 4 days because of you. And I was like, last time we rolled was like a week ago, and I don't remember it being bad. But what I had forgotten was during one of our like higher level competition classes, me and this guy fought for like 30 minutes straight. Like we just kept on going and going and going. And I guess I must have like played on his neck too hard for too long. And he's like, yeah, I couldn't. Like my wife was asking me what happened. And he's like, Chris happened to me. Chris happened to me. And now I can't turn left.
Chris happened to me. I love that. Using you as like a verb. I love it. I love it. He happened to me. It's an experience. Yeah. Hopefully wow. That's brutal. That's brutal for him. But the same could have happened to you. So that's,
the thing I like about this guy is that, he and I are about the same age. Mm-hmm. He's probably 6'3", 6'4", so way
guy.
Taller than me.
Yeah, big guy.
He's probably 235. So he's got about like 40 pounds on me.
Yeah.
And the thing I like about him is he'll fight against someone I'm like, what, 5'10", maybe? On a good day, I'm 5'10". Like 180, 185. And like he'll get smashed by me, who's much smaller than him, weighs less, but he still keeps on coming back and he doesn't take it personally. Most people, they get beat at someone smaller than them, especially someone like him who's big, who's tall, who's physically very like intimidating.
Yeah.
If you were to walk into a gym, you'd be like, oh, I'm gonna destroy everybody. And then you get beat up by someone that's smaller than you. Most people are like, I'm done with this. I'm never gonna play this again. But he keeps on coming back for more and more and more. He's getting so much better. So it's always cool when you meet somebody like that on the path who is willing to set their ego aside in the hope of progress.
And that's what we can all really hope for, right? That's what we want. That's part of what we do with this podcast, right? We're trying to push the needle. You're not going to get all your skills, all your information from one place, and you really shouldn't get it all from one place. It's good to have perspective from people who have walked different sides of life, the good sides, the bad sides, right down the middle path. And our guest on Monday had an interesting life, had a very interesting upbringing. And one of my notes from Monday's podcast was actually something that his dad did, right? His dad was I don't want to say, maybe a prolific investor, right? With the full integration. I mean, he was talking about, he bought the land, right? And then they built the buildings and he owned the company that built the buildings. And well, these buildings needed insurance and he bought an insurance company, right? Made an insurance company. And how's that? And when real estate was down, right? Because they were rented houses, real estate was down. That's okay. Because the insurance kind of made up for it. And I love that because you can see a man that neither of us know, neither of us ever met, and will never meet because he's passed, I'm sure, had an impact on our guest. And you could see it in his investing. And it was so interesting because his father was so focused on steady income and not necessarily the 9-to-5 grind, nothing wrong with that, but just an alternative to everyone else's typical experience, go to college, get a degree, work for 40 years. And what I thought was so interesting about our guest was the way he looked at investing. Would you go into a little bit of detail on that, Chris, and kind of explain, because it was a high level conversation, right? Chris is above me, I'm on the earth. He's in the star, like he's way above me, right? So you understood a lot of it, right? And I was picking up as much as I could, but I would love for you to maybe dumb it down for myself, and the average listener to really make it stick. Like, what were your favorite parts about Monday's podcast?
Yeah, for sure. The first 30 minutes of the conversation, I got really worried, like as we were going through it, that like we're talking at too high of a level. That most people, if they're listening to it, they're like, I don't know what these guys are saying, and they're going to leave. So if you started the conversation, you listen for the first 15, 30 minutes, and then we're like, I'm done, I would say go back and skip to 30 minutes in and listen to the rest of the conversation, because that's when we get out of the weeds of the book and we get more into the philosophy and the thinking process that you don't need to have a background in or a decade of experience in finance and all this lingo to understand. But yeah, so Steve has a very different strategy than what we typically dispose here on the Spy Guys. What we typically do is we're long-term buy and hold investors, because what I found is you can have the perfect plan, the perfect system, the perfect trading, the perfect algorithm, the perfect whatever. But if you don't have the desire, the time, the fortitude to go ahead and execute that plan is effectively worthless. And what I've found over my decade of doing this is that rather than teaching people the perfect plan, I would rather just get them started. And then they can find the perfect plan for themselves after they get started by figuring out their money mindset, figuring out what they need to do, figuring out their cash flow needs, their spending needs, all of that stuff. And then the investing, if you want to go take it to a higher level than just dollar cost averaging, we can learn that later. But too many people focus on, I'm not going to do any of the basic stuff, the foundations, until I know my perfect plan, until I know the perfect investing strategy. And now you find people in their 80s and 90s who are still looking for that perfect investing strategy before they start actually figuring out their money. And I would rather reverse that with anybody I meet.
Absolutely. And, I was having this debate with a friend of mine actually recently, because my win of the week is, I'm not going to show you the front of it, but this is the back of it. And we'll get into that later in the pod. But I had to have a real conversation with myself about this book, because I didn't want to have to, I really wanted to get this book, but I was worried that, am I just getting another book just to learn? Or is this going to be a blueprint that's actionable, And a lot of people, like what you were just saying, how, they just take in, right? They analysis paralysis, and the best time to plant a tree was 20 years ago. Next best time is today, right? You have to stop and ask yourself, like, is this actually moving me forward, or am I going in circles? And so many people do that in finance with the stocks they pick, or with the mutual funds they pick, or with just saving in general, right? Oh, well, I listen to Dave Ramsey in the car. Cool. I'll watch a savings TikTok. Cool. I bought a book by Susie Orman back in the day. Cool. But none of those actions are actually saving, right? It's like watching workout videos. You're not getting any healthier. You might be getting a little more knowledgeable, right? But knowledge only exists up here, right? You got to actually do it. And it was so interesting because the way he invested, I know, here's my take on it, right? In today's generation, right? You have young kids, 18, 19, young kids, right? I want to invest in the stock market. I saw the meme coins go. I saw this go crazy, right? They're gambling, essentially. Truthfully, it's gambling, right? They're trying to pick a stock, right? So they go in for the greed. So they have a reason to go in, right? Someone like you, Chris, right? You use the stock market as a tool. And really, that's what it is. It's a tool to get a little bit more on your money. And he used it in the same way, just as a different tool, as income. And I thought that was really interesting, because I've heard of dividend producing stocks. We all have. But his knowledge and his grasp of it, and really not just, oh, I know what a dividend stock is. Sure, buy ExxonMobil. Every quarter you'll get a check. It's a X% yield. No, he's living proof that it's possible to live off your investments. And as someone who's young, thinking, wow, like I have to wait 40 years to touch my investment, like that sucks. It's like, no, that's not the case in this situation. But
yeah, there's so many ways of doing it, right? Like his way, and again, on the first 30 minutes of the podcast, we had a very high level. We never went super low down to the ground so people could like catch with us. And that was on me for not running that conversation the way I should have. So what I'm going to do is I'm going to correct that error today and kind of explain more of what a closed-end fund is and how we can go ahead and invest in these things, because it is possible for everyday investor. But that means if you want to do this way, it is going to take time, it's going to take dedication, it's going to take hours of work. For my thinking about it, is the average person 20s, 30 years old, they don't have a couple of hours of work a day to go ahead and put in this. That's the reason I say dollar cost averaging is usually, and again, it's usually what's best for most people, because most people don't have hours, they don't have the dedication, they don't have the time, they don't have the desire to do that. But if you want to run Steve's program, he uses something called closed-end funds. But a closed-end fund is basically the great-grandfather or the grandfather of all funds. It came before mutual funds. It came long before ETFs. The reason people don't know about closed-end funds, though, or they think it's like some magical thing that come down from heaven, is because most people, the way they interact with the stock market is through their 401k. It's through their employer. And employers are typically they have a fiduciary obligation to their shareholders to try to keep the fees, or to their members to keep the fees as low as they possibly can. So what they started doing for a long time was using mutual funds. And then eventually ETFs came out. ETFs had even lower expense ratios. Then they moved to ETFs. Closed-end funds could not be inside of 401ks because of the way that they work with the Securities and Exchange Commission. They're basically trust accounts. And in those trust accounts, 95% of the income generated has to go out to the shareholders. But in a 401k, you can't accept that income. You could reinvest it, but you can't accept it. So that means that the 401k company would have to sit there and get all this income and then choose to reinvest it again, now mucking up the conversation, making it more difficult. That's why people never hear about this, because once they leave their 401k and then they go to an advisor or they leave that, they're like, okay, so it's invested in a mutual fund or an ETF. I'm just going to stick with that because this is what I already know. And they never go back to learn what a closed-end fund is. But a closed-end fund is very much like a mutual fund. There is think of like a private equity company, a company that is sitting there and they're managing either stocks, they could be managing municipal bonds, they could be managing corporate bonds, they could be managing real estate. It could be a slew of so many different things that a closed-end fund could have.
Mm-hmm.
And they're trying to produce income. That income, when it comes into the fund, they get to have it. They're going to pay their money with it. But 95% of that money needs to get distributed to the owners of the fund. And you, as the owner of the closed-end fund, is an owner of the fund. So you're making income on there. From there, you have an option to either reinvest and buy more of that closed-end fund, or you can go what Steve says to do and take that money as income and then go ahead and choose to redeploy it into other options or other closed-end funds that you want to purchase, or start living off of that income early on as you do in retirement. There's a super high level of what he does.
So why do you think that this is kind of a mysterious product? Why do you think we never hear about this? Because I feel like I'm above a beginner in finance. I know more than the average, I would hope. And you're like super high level, right? But I'd never heard of a closed-end fund. Even when I started listening to it, I first thing I asked you when we hopped on the call today, I was like, is that the same as like the brokerage funds that like you work with, like that are closed off where you need to have $50 million to work with them, right? Is that like this? Is it similar? And you were saying
no,
it's not, right?
Yeah, you're thinking of like an accredited fund. So people who have over $1 million in net worth outside of their primary home can start to invest in this. And that's basically the Securities Exchange Commission way of protecting the little guy who's too, if you're not watching us on YouTube, I'm doing quotation marks, who is too dumb to go ahead and invest the right way. So we need to protect them from being able to invest in things that are quote unquote more risky. We'll let them go into any BS coin that they want, any cryptocurrency. We'll let them do all this other stuff, but we can't let them deal with IPOs. We can't let them deal with a bunch of stuff or pre-IPOs until they have $1 million net worth. Because now for some reason, now they have $1 million. They're magically an investor. Not the way it works, but that's the way that is thought of. So no, a closed-end fund is not a accredited investor fund.
Gotcha. I just wanted to make sure, again, an accredited investor fund is also high level, right? It's not something that I can access, right? You need to be with someone like yourself, correct, Chris?
Typically, yes.
Typically, yes. Okay. Yeah. What are some of your favorite points that you learned from Monday's pod?
I think the biggest thing that I wanted to get across with talking with Steve, because his method works of doing the closed-end funds and using it for income. It works. And one thing that I brought up in the conversation, I'm so glad that he agreed with, was you can have the perfect plan, but if you're not going to execute it, it means nothing. So I asked him, do you think it could be possible in a world that someone could go for the dollar cost averaging, just go for the focusing on growing their portfolio as big as they possibly can. And then when they reach that magic number, and I don't know what that number is, everyone has to determine what that number is for them. I know what my number is. I don't know what your number is. I don't know what your number is. You have to figure that out for yourself. Once they have that magic number, now they can go ahead and turn that magic number into an income producing by learning how to do his strategy. So we can have both strategies work for a person and it both be correct simultaneously. And he's like, yes, of course you can do that. And that way you're no longer in the dollar, in the way that we do it, you're no longer just pulling off the 4% rule and hoping that that sticks with it. You get to now eat from your money without having to draw down the principal, which the Trinity study does do, but it just makes you have to have a little bit more.
Yeah, and I like the idea of not touching the principal. I love the idea of not touching the principal. I love the idea of compound interest, maybe a little bit more, but it's such a beautiful strategy. More people need to know about this. Because like he was saying, right, the profits for most companies, right, they go back to the owners of the company. But with this strategy of investing, I mean, now let me preface, obviously you're going to be buying a stock or a share, right? So you're an owner. So technically, I mean, obviously, if I went and bought a share of Apple or Amazon, I too am an owner of that, but it's a little bit different because they're not returning the profits back to me via dividend as much, correct?
I didn't understand the question.
It's fine. It's fine. So that's fair. That's when you know it's a bad question. That's when you know it's a bad question. So I'm just trying to understand it a little bit more. So basically, the fund that he's talking about, the closed off funds, those are ones that return the profits of the company or the companies, and they pay it back as a dividend.
Maybe I should explain what a closed-end fund is versus an open-end fund.
Please.
So an open-end fund is your traditional mutual fund. So basically, they can continue to accept as much money as they possibly want. So like anyone can buy in at any time, and then what they're going to do is they're going to go off net asset value. So at the end of the day, they're going to reset and they're going to go ahead and repurchase as much stock as they had that came in. And if money leaves, they're going to sell off as much stock as they need to make sure that they're kind of whole. There's not really a better way of explaining that. I need a chart to do it.
Gotcha.
But with a closed-end fund, it's saying this is all the investor money that we have, $50 million, $40 million, whatever it is. We're done. We're not collecting any more money. We're not taking any more money. We're going here. You can still buy and sell your fund that you have, but the fund is closed. You're no longer purchasing anymore. When you are buying or selling, you're selling between other people that want to purchase into that fund, but they're not putting any more money into the fund. They're selling between each other. So something that's wrong with closed-end funds, or an issue sometimes with closed-end funds, unlike ETFs and mutual funds, is being able to trade and like get out of it can sometimes be an issue. Yeah, liquidity can sometimes be an issue with closed-end funds. With mutual funds and with ETFs, there isn't that liquidity issue because there's always buyer and sellers. And if you want to just sell, they'll just go ahead and liquidate some of the stock in order to make you whole. But in a closed-end fund, that's not an option. You have to find somebody else in order to make that sale. They have to agree to buy it. You have to agree to sell
it. And I think that sounds very ominous. I have to find a buyer. I have to find a seller, right?
Well, the broker does all that for you.
Exactly. Yeah. So it's not like, hey, Bill,
yeah.
would you like to buy this? Right. It's like, no, it's still through broker. And, you know, so basically I'm trying to figure out the right question to ask for this one, but this isn't something that you kind of recommend very often, correct?
Not for average people, no.
Okay.
If you have the desire, the hope, and the ability to look at your portfolio every single day, and that gets you excited and not scary as hell, yeah, maybe you can go ahead and try to figure this out. But most people are afraid to look at their bank account, nonetheless their investment account, and then it's even scary to think like now I have to go in there and like click that buy button, like click that sell button, like I have to do stuff, and if I don't do stuff right, I could lose money. Like, yeah. So scary. That's why for the average person, no, I don't recommend this.
Okay.
But if you have that desire, then yeah, go for it. Or if you got to a point through financial independence, through learning about your money, through first off figuring out your financial foundation, knowing how much money is coming in, knowing how much money is going out, knowing what your budget is, knowing all of this stuff. And you're like, I love this stuff and I want to take it to another level. And I have the time, I have the desire, I have all this stuff, go for it. But if you're still working 9 to 5, you're leaving at 7 a.m. or 6 a.m., you're getting home at 7 p.m., you're tired, you have your kids, you have to make dinner, you have to clean the house, and now you're somehow going to try to find 2 hours out of your day or an hour and a half to do some stock trades for tomorrow. It's not going to happen. The perfect plan means nothing if you don't have the ability to execute. So That's the reason I don't recommend it for most people until you are ready.
Till you're ready. Okay. And how will you know when you're ready? When you're able to deal with the fear of loss when it comes to money, or?
I think when you're in control of yourself a bit more, when you have more control of your time. So ideally at this point, you're approaching financial independence. So you can cut back your working hours from 40 hours to maybe 32 or something like that to start learning this stuff. The other thing is you need to get control of your mind. Do you have the ability to look at your brokerage account and make unobjective decisions and not have your brain get involved in it where it's like, oh, no. Like, I know what to do. Not right now is not the right time. I should wait a week and that'll be the right time. Can you stick to the process? Will you be able to stick to the process knowing that it's going to work out in the long run, even though in the short term, it might hurt? Because that's all that this is. And it's so difficult because money is the personification of our time and our effort. And our time and our effort is our life energy. That's the one non-renewable resource that we all have. It's our time. It's our life force that we're giving for this thing called money. And now we put this money into the stock market, into a cryptocurrency, into a real estate transaction, into whatever. And you hope that it's going to go up, but you start to see it go down. You don't know how far down that is. And as you see it going down, it's not just your money's going down, it's your life energy. You're like watching, like, that was my 20s. And it goes down a little more, like, that was my 30s. And it goes down a little bit more, like, that was my 40s. And it goes down a little bit more. Like, that was 3 decades of my life and it's gone. Wasted. Of course, it wasn't wasted. You had 3 decades of your life. There was more than just the money. But that's what's happening in your brain, all right there. Do you have the wherewithal to sit there and say, I'm going to keep on doing this because I know it's going to come back? Because I know I didn't just lose my 20s, 30s, and most people don't have that. Everyone can get there, but it's going to take conscious time and effort. It took me over a decade of working with myself to be able to get here. You know, maybe that's something that we should talk about. Earlier, you said something to the effect of, if you want to be fit, you need to be around fit people. You need to not just watch the videos, you need to actually do it. And I work with a lot of financial advisors. Another job that I have, which I can't believe I do this too, is I'm a chief growth officer for a RIA, for a registered investment advisory firm. You would be surprised, Dominic, how many financial advisors don't have their financial house in order. And I think the reason that they don't have it in order, but they go around telling people how to be better with their money, is because sometimes it is easier to tell people how to live their life rather than doing the work to actually live the life the right way. And that's where I think my delineation kind of works a lot with my clients, is that I'm not just telling you how to do things. I'm also walking that path. And I make mistakes and I'm willing to go ahead and talk about that. But I think so many advisors, if you're on the ladder of life, they're trying to push people above them. And you can't push people up a ladder, but you can always pull more people up. So that's why it's so hard to find somebody who's above you, not above you like if they're a better person, just they're above you in this stage of life, and they're there to help pull you up onto the ledge. But there's too many people who are below you on the ledge who are trying to just be like, yeah, just keep doing what you're doing. I'm not going to do what you're doing, but you do it. And I think people can feel that.
And that's why people hire people like you, is because they want someone who's not just armchair quarterbacking, but, hey, this is the path. I've walked it. I lived it. And you can come with me if you'd like, because I know the way. And I think that's what people get when they work with Monzon Wealth. And that's a beautiful thing, because there's nothing wrong with getting help. There's nothing wrong with getting help. And a path that you want to go down is so much better with a guide. It's so much better with a guide. Everybody knows this. Like, try going to Japan, try going to China, right? Just drop yourself in China. Have a fun trip. It's like, okay, but if you had a guide there, spoke great English, spoke great Chinese, right? They guided you through. Well, that's a different story, right? And that's kind of the difference with your company. And that's a big difference with you as a person, right? You're trying to bring people along on a journey that you've been through.
No, you're exactly right. And I'm still on it.
Yeah.
It's not like it's over. It's not like I've reached the destination. It's just that I've gone through the jungle a little bit and I was like, all right, like, I think I'm safe here. And I know there's some people back there. I'm going to go help them out. And then as I tell them, like, hey, watch out for that snake pit. Watch out for this tree. Watch out. There's like there's a guy behind the tree over there. He's going to grab you. There's all this stuff. Watch out for that. And while you guys are making it through that, I'm going to keep on trying to cut down a few weeds ahead. I'm going to keep on trying to go a little bit farther ahead so that when you catch up with me, I can tell you, like, hey, I've already been here a little bit.
That's exactly it. Well, any final thoughts from Monday's pod, Chris? before we move on?
No, I'd like to thank Steve for coming on the podcast. If you guys want to learn more about what we talked about a little bit in a deeper level, I would certainly recommend picking up his book, Retirement Money Secrets. It's available on Amazon for like $10. There is a link in the description on Monday's pod. You can go ahead and find that as well. But go ahead, take a look at that. Take a listen to learn a little bit more if that strategy sounds like something that you would want to look for yourself.
Perfect. So let's get on to my favorite part of the week. Well, one of my favorite parts of the week, I gotta say. So this is viewer mailbag. This is where we take a letter from the community and we read it out loud for all to hear. So be careful what you put in your mailbag because we might share it with the world. But today's header is $93,000 in credit card debt. Finally gone. How about that? So let's
get. I thought I was going to go the opposite way. So that's awesome.
It usually does. It usually there's no finally gone on the sentence. It's usually just, hey, I'm 100 grand in debt. Please help. So this is a success story. So let's lock in, grab your popcorn. Let's get into it. So 12 years ago, 7 cards, $93,000. It still doesn't feel real to say those words out loud, much less write them down. But here I am, staring at the receipt for my final payment. It's over. Finally. This debt has owned me since 2012. It wasn't just a number on a statement, though. It was a weight that I carried every single day, a shadow that loomed over me and every decision I made, whispering that I'd never be free. I was 24 years old when it all started, fresh out of college and working in retail. My dad had a stroke that year, and my parents were drowning in medical bills. They had no savings, unfortunately, and nothing to fall back on. And I felt like, since I was the eldest kid, I needed to step up. I maxed out one card, then another. Groceries, medication, rehab sessions. I convinced myself that I was doing the right thing, that helping them was my duty. I thought I could handle it, that somehow it would all work out. Totally understand.
Dude, this is the part that frustrates me, is like how effed up our medical system is, that a 24-year-old feels the need to go into debt to like rescue their parents.
Yeah. This is why we kind of preach taking financial responsibility, right? Because life can take a turn at any moment, a whole 180. So it's good to have your house in order so you don't burden other people with it. But thankfully, they raised a very good kid, a loving kid, right? Because some kids would say, hey, that's the luck.
Yeah. Deuces.
Deuces. I see it Thanksgiving. Oh, man. So, all right. But by 2015, it hit me. I couldn't even afford the minimum payments anymore. The interest ballooned so fast that I couldn't even... the interest ballooned faster than I can earn. Oh my goodness. Oh my goodness. That's rough. I was trapped in this cycle. Every month, digging deeper into a hole I had no idea how to climb out of. I stopped opening statements. Stopped answering calls from unfamiliar numbers. My anxiety was through the roof. I felt like a failure. And not just to myself, but to my parents. If anything, I'm going to put a pause right there. Shouldn't feel like a failure, especially to your parents. Especially to your parents. I'm going to continue. I tried to save them, but now I couldn't even save myself. Then, in 2017, I got lucky. Congratulations, luck is nice. I landed a part-time gig at a tech startup. It wasn't glamorous. Customer service, to be honest. Answering endless emails, but it came with bonuses and eventually some stock options. For the first time in years, I saw a sliver of hope. I threw myself into my work. Every extra shift, every side hustle, I even sold my car. I moved into the tiniest, cheapest apartment I could find. I bought a hotel. No vacations, no new clothes, no social life. Just me, a microwave, and a stack of instant ramen. How about that? Sometimes that's what it takes. Friends would invite me out, but I couldn't go. Not just because I couldn't afford it, but because I was embarrassed. I didn't want to explain why I was turning down yet another event, yet another invite, why I wasn't at their wedding, at their parties, at their anything. For years, it was just me and the grind. Wake up, work, budget every dollar, throw it at the debt, and repeat. And then at last, it happened. I made the final payment. I stared at the screen, waiting for the confirmation to pop up. And when it did, I broke down. 12 long years, over a decade of my life, gone in interest payments and stress, and not to mention those sleepless nights. And now I'm finally free. No more creditors, no more shame, no more feeling like I'm drowning. If you're in this kind of hole, I wish I could tell you that there's some magic solution, but there isn't. It's hard. It's lonely. It takes sacrifices you didn't think you'd have to make. But if you're hearing this and you're in that place, I want you to know something. It's not hopeless. You can get there. It may take years, and probably will. But you can climb out of it. Just take it one step at a time, $1 at a time. Because if I can do it, you can too. Now, before I finish, I need to say this. I couldn't have done this alone, and a huge thank to the Fi Guys. Listening to Chris and Dom talk about their own financial journeys gave me the push I needed on my darkest days. Their stories, their honesty, their no BS advice, it all reminds me that the struggle, it's worth it, and the freedom is possible. I carried those words with me through this entire process. So Chris and Dom, if you're reading this, thank you. You didn't just help me change my financial situation, you helped me get my life back. From 12 years down, no debt to show, finally free, and I'm ready to grow.
Dang, man, I got goosebumps from that one. That was
I'm almost
awesome.
crying. That's
Got chills.
That's great. That is, oh man, beautiful. Beautiful.
Well, first off, to our reader, I want to congratulate you and thank you for thanking us. But like, we're not the heroes here. Like, you're the hero here, man.
Yeah.
Like, you did the hard work.
Yeah.
Like, we just like cheered along from the side, not even knowing who you were. So
yeah. And that's so true. It's so true. Don't put the victory on us. The victory is yours. And wear it like a freaking badge of honor. And anytime you feel down, just remember, like, yo, I was $93,000 in debt. My family needed me. And you know what? I stepped up. It cost me a lot, but I dug myself out of that hole. Put it in that mental cookie jar of something difficult that you did. It took sacrifice that no one can really understand. And when you need that, pull it out of that cookie jar and read it, right? So this is a you win. Oh, we're very proud of you. Very, very proud.
Yeah, you definitely did something very, very special there. So, I mean, there's really not a lot that, I mean, I like these ones where someone sends in the things that they won in because I don't really have to say anything. Well, I guess what I would say is you can always get better and it's going to take time, one step at a time, just like he said. And there's going to be a lot of times you're going to feel like I'm not making any progress. And that's just the journey. That's the way it is. I mean, it's just like that way for financial independence. You start off really hard. You're like, okay, I need to learn how to save. I need to learn how to do all these things. And then you were like, you have a lot of momentum at the beginning. And then you hit this thing called the boring middle. And the boring middle is when you're making progress, but you don't feel it because you're not making quick progress anymore. Just like when you go to the gym, your first few days, you're seeing all this, you know, clothes start feeling a bit looser or maybe tighter, depending on what you're going for.
Yeah.
You know, you start looking at your arms, you're like, oh yeah, I look great. And then you do it for a few months and now the progress kind of slows, almost stops. And you're like, am I even doing anything? Is this even worth it anymore? Of course it's worth it. You keep it going every single day until eventually you get to look back because you're never going to actually reach your destination. But you'll be able to look back and be like, wow, look how far I've come. I want to touch on another thing though, is that it saddens me when we read where he talks about not going to his friends' weddings, not going out to eat, not going out to do all these things and sacrifice. And the reason it saddens me is because I've lived that life before too. You know, I wasn't even in debt. I was just at such a place in my life that I needed to escape. I needed to get out of it, out of being hold it to another person to make a paycheck. And I saved and I saved and I saved and I didn't spend my money. And while it set me up for the life that I have now, looking back on it, I don't think I would have sacrificed my 20s to be able to be free in my 30s. I wish I could have just had more fun in my 20s and maybe delayed it 5 or 10 years and still been fine. So if you find yourself in this place where you're in debt, yes, you need to get rid of the debt and you can still live for today. And what that balance is of throwing the money all at the debt and throwing the money at living today is, I'm not the person to tell you what that is. I don't know. The reason I don't know is because it's an individual decision and everyone needs to find that for themselves based off of you and what you're able to do and what you're able to sleep well at night with. It's because there's a bunch of people online who say, if you have debt, you're a bad person. If you're living for today only, you're a bad person. Nothing in life is black and white. They're all shades of gray. Listen to yourself, listen, and if you ever need help on that, reach out to people. But if there's somebody who's telling you there's only one way to do things, you need to run away because there's the one way that worked for them. That doesn't mean it's going to work for you every single time. People that are too dogmatic, I don't want anything to do with them. Like
100%. 100%. Yeah. Anytime anybody says, like Chris says, this is the one way. This is a way. It's a way. Yeah, that kind of breaks my heart a little bit. Breaks my heart what
yeah,
the sacrifice, what it took. I'm happy they did it, but I'm sad that it had to happen in the first place. Granted, they're stronger now because of it, and I'm grateful for that. But it's avoidable. The initial
I don't know if
event.
this. Yeah, I don't know
Yeah,
if this was. I mean, he probably shouldn't have done that and like put stuff on his credit cards for his parents. But we could go back in time and be like, your parents should have thought harder. Your parent. We could probably point the finger at every
yeah,
single person. Whose fault is this?
yeah.
And at the end of the day, it's really no one's fault, and it's everyone's fault. And that's the sucky part about it. But he was the one that took it on himself, and for him to say, I didn't feel like I was worthy, like I let my parents down. Yeah, you can look at it that way, or you can look at it that your parents let you down. I'm not saying that either one of those ways is right and one of those ways is wrong, but which one of those ways serves you and allows you to move forward? What's serving you? Ask yourself that question as you go on, because now you're at this place where you've just watched your net worth go from negative all the way to zero. And now you might start comparing yourself to people and be like, oh man, I'm only at zero. Like, look at that guy. He's at 1 million. He's at 2 million. He's whatever. Compare yourself to who you were. And now we need to get addicted from seeing our net worth going from negative, a little bit positive, more positive to zero. Now we need to start to take that same tenacity, maybe not the same level of tenacity, but that same tenacity, and start putting it, watching that net worth grow. Start putting that money that you were throwing at the debt, start putting it in investments, start putting it, creating an emergency fund, a crisis fund, max out your IRAs, your Roth, your everything that your 401ks, if those are available to you. And remember to live for today because you've put off the last 12 years of this, and we only have this one life that I know of. There are a lot of people that like to pontificate to say, oh, there's an afterlife, and all this stuff. No one really knows. But what I do know is you're here right now. You want to make the most of this one life. Because if there are more after this, wonderful. But if there aren't, let's try to maximize what we know we have.
And you can really only do with what you have. You can't go forward in time. You can't go backward in time. So let's just live for today, like Chris said. And you're going to be living a much better life now that you're no longer in the hole. Thank you for writing in. We appreciate you. And thank you for listening to the podcast. Now we're going to move on to our next and final segment called Win of the Week. Pretty self-explanatory. Usually we do this to end on a little bit of a positive, but today sounds like the whole episode was positive, so that's nice. Chris, I would love if you went first on today's Win of the Week.
Of course. So my wife and I, we finally signed up for Global Entry, and we have our interviews in the next 2 weeks or so to go down to the airport and get interviewed to make sure that we have it. This is something we've been meaning to do forever since we travel so much. Global Entry is when you go into other countries, you have to wait in these long lines, right? To like go in there and have your stamp and everything done.
Yeah.
Global Entry allows you just to kind of bypass that. You can walk up to a little kiosk, they scan your eyes, and they're like, oh, you're good to go and go. So I'm very excited that we finally signed up for this. I don't know why it took us so long to just sit there and actually do the application online. Another thing that was kind of cool is the application does cost $120, and we knew we were going to have to pay that. But what I had forgotten is that we have a bunch of credit cards that give us refunds for that $120. So we were able to do global entry for free, which makes it even sillier that it took us so long to actually do the damn thing when it was free for us, because we have all these credit cards that make it free for us. But yeah, we finally signed up. We got conditionally approved. We have to go do our interview, and I'm sure that won't be an issue. And then we'll be fully approved and get our global entry cards.
That's awesome. That's awesome. What do you think? Like, what was the reasoning behind like not getting it initially?
Laziness.
Gotcha.
It's just, I mean,
low on the priority list.
There's always so much stuff to do. We have TSA pre-checks that allows us to go through the airport quickly. And we do international travel, but not as often as we do domestic travel. And it was just kind of like, in order to even once you do the application online, which we didn't know you could do it online until we just Googled it, like stupid, dumb us. We could just Google it at any time, but we didn't. But we did know that at some point you had to go down to the airport to have your interview. And for some reason in my brain, I had to go to the airport to even put the application in. And I just never even did the research to look into it. So maybe this is a good lesson. And if you think there's something that you need to do, just give it a quick Google search to at least know if you're on the right track. Because how many of us go through life saying like, oh, I can't do this, or this isn't for me, because of some thought in your head that you have no idea if that's true or not. You just accept it as fact without having any precursory knowledge.
That's exactly it. It's crazy what a Google search will do to your life. All right. Well, that is a good win of the week. I'm happy for you, Chris. Make it a lot more speedier, getting through those airports, getting to those lounges. I love it. So my win of the week is I recently purchased a new book called Main Street Millionaire by Cody Sanchez, a fellow YouTuber. I just started it, so don't expect a book review right now, but maybe down the line in a few podcasts, we'll do a book review on this one. But it's an interesting one about how to make extraordinary wealth by buying ordinary businesses. Now, this is not something that Chris is too into. He's got his established business. His plate is full and he's hungry. But me, myself, and I am looking for all sorts of different areas and opportunities to, like the book says, make extraordinary wealth. So once I'm done reading it, pass the knowledge on to you. But I highly recommend all of Cody's content. So feel free to YouTube her, look her up on YouTube or any other social media platform. That was Cody Sanchez with a C-O-D-I-E Sanchez. But with that being said, enough of the free promo. Get that out of here. If you did like today's episode, though, make sure to follow. Make sure to give it a like and a 5-star review if you're listening on all of the many podcast platforms that we are on. And if you're watching on YouTube, make sure you're watching on YouTube. Feel free to subscribe. I'm Dom. He's Chris. And I believe that is all we have for you today on the Fi Guys podcast.
It is. The only thing I'm going to finish off with is make sure to share the Fi Guys with one friend. Bring somebody along for this journey, because it's so much more fun to go with a friend than to go alone. And with that, I'm Chris. He's Dom. Later.
Peace.
This video podcast is sponsored by Monzon Wealth. The content in this podcast is for informational purposes only and should not be considered financial advice. We do not endorse specific products or services. Past performance does not guarantee future results. The opinions expressed are those of the hosts and guests, not the podcast sponsor. It is crucial to consult with a qualified financial advisor or professional who can provide advice tailored to your specific needs before making any financial decisions, investments, or taking any other actions. If you are seeking specified help, you can reach out to Chris at monzonwealth.com.